Hello, and good morning. It's me, Kenny Polcari, your host of the party. And today's morning market commentary. Sure, of course. It is Tuesday, August 31st, 2021. It is the final day of August as we now move into the September-October time period and seasonal volatility. But lots to talk about, so let's just see what's going on, right? So what happened? The war is over. The last C-17 takes off from Hamid Karzai Airport yesterday at 3:29. Stocks ended the day mixed. The S&P and NASDAQ making new highs. The growth trade keeps growing, leaving value aching for more. Robinhood is under pressure this morning as Gary Gensler considers the elimination of payment for order flow, which I say is about time. South Korea imposes curbs on Apple and Google. More on that. And we're going to try the fettuccine with leeks and peas tonight for dinner. It's a simple recipe, easy to make, and so good. So good Tuesday morning, right? It's over, or at least they say it's over. At 3:29 p.m. yesterday, the last C-7 took off of Hamid Karzai Airport in Kabul, leaving Afghanistan free of any American forces. Forces that have occupied the country for 20 years. The final days were difficult, and the days ahead will be difficult as well, just in a different way. This afternoon, Joey's expected to address the nation and will try to bring closure to this very long chapter. If Secretary of State Anthony Blinken has any insight into the thought process, there's going to be a lot to discuss. The Taliban have now become working partners with the U.S. as they, according to Tony Blinken, have promised to act with dignity and honor, helping the stranded Americans and any of the Afghans that want to leave. They have also promised to allow women and girls to be an integral part of this new society and have already inquired about joining the G20. I mean, you can't even make this up. Who would believe it? But as you might imagine, none of this had any effect on the global markets at all. While it did cause some short-term angst and anxiety the last couple of weeks, as far as the market's concerned now, it is nothing but a distant memory. It's very interesting to say, we talked about that, right? Politics cause short-term disruptions, but not long-term pricing. Stocks ended the day yesterday mixed, right? The Dow and the Russell and the transports all lower, while the S&P and NASDAQ managed to pull out gains once again. The action really driven by the continued analysis over what Fed Chair Jay Powell told us on Friday, essentially saying that investors should not overreact to the idea of a taper or the idea of inflation. Or the idea that interest rates are about to rise. Nothing to see here, just keep moving. It's all good. We're going to continue buying $120 billion of treasuries and mortgage-backed securities at least for the next 3 or 4 months. Technology surged. The XLK ETF gaining 1.1%, real estate gaining 1.2%, both sectors that should do well in a continued low-rate environment, as investors continue to expect them to post strong earnings growth in the months ahead. Big tech names did not disappoint. Microsoft up 1.5%. Apple up nearly 2%. Amazon up 2%. All while Cathie Woods' tech disruptors did well too. Her ARK ETF rising by 0.6%. And as you would imagine, the growth ETF, SPYG, rose 1.1%, leaving value, SPYV, down 0.4%. Year to date, the growth trade is up 23.5%, while the value trade's up 18%. But the year is not over, so I'm not conceding yet. Although this morning, we're seeing Zoom Communications fall 11% in the pre-market after they reported their future growth yesterday is going to be hampered by the return to work movement and less people using this remote service provider. And that may affect the work from home stocks, right? The WAFH ETF. Now, while that ETF is up 17% year to date, if what Zoom says is true, then watch how the stocks in that ETF may perform, and that ETF may come under some pressure. Eco data, which showed pending home sales plunging by 9.5%, and the continued surge in COVID Delta cases did little to stop the excitement, right? Let's just say it. Investors are not concerned about the Delta variant from an investing point of view. How they feel personally is a different question. But that's not the issue. And that seems to be the view of the Fed chair, the ECB, and many other elected officials around the world. We heard what Jay Powell said. He's not concerned. We heard what the ECB said. They're not concerned. Some analysts will tell you that the financials and the energy sectors that were weak yesterday was because of the COVID concerns. To that I say baloney. Financials, the XLF, were down 1.4%. Energy down 1.2%. They took a breath yesterday after the recent surge that they've had, and with rates not expected to go higher anytime soon, that would cause weakness in the financials. And now that Ida is gone, the jump in oil due to the production and refining concerns is also no longer a concern. While the storm did cause major damage to the Louisiana coast, the rigs in the Gulf and the refiners on the coast survived the storm. So now it's just a matter of timing. Supplies of oil are going to start to resume, so the pressure will be off. Neither of these moves lower yesterday are the result of anyone being concerned about COVID. Come on, man. Stop the hysteria. So it's up. This could be another up month for the indexes, right? 7 months in a row, if that's true. But that's no real surprise since we're spending all that money every month by the Treasury. And that's exactly why I remain much more cautious in the weeks ahead, and why I continue to think that investors need to brace themselves for some coming volatility. September and October are vulnerable months. And with the Fed now on course to announce the beginning of tapering at the September meeting, I think patience will pay off. Remember, if you're invested, you're not missing out on any advance, right? If you're not invested, then what are you worried about? Jump in slowly. Get started slowly. Put your plan together with the help of your advisor, if that's what you want, is to form a long-term plan. The VIX, which is the fear index, is once again near its lows, closing down 1.22% to end the day at 1601, suggesting complete complacency. So don't be surprised to see that to see that change, right? Because you should be ready to take advantage of any change in market psychology, and I think you're going to see that. The 10-year Treasury ended the day yielding 1.28%, down from 1.33, as money moved into the Treasury market. And that also makes sense as a safety play for some money trusted to the asset managers, because as the market rises, the risk of a bigger pullback is amplified. So it's just good risk management. That's all. Oil ended the day up 0.5%, but it's down 1% this morning. Look, it's been very volatile over the past month, right? As so many on the street warned of how the Delta variant was going to crush demand, and then the recovery. Really, how's that working for you? Oil fell 15% from its mid-July high to mid-August, and then it rallied 12% from mid-August through yesterday. As trader types get a handle on what's next, right? They're trying to understand what's next. This morning's weakness is just the commodity trying to find some stability after the hurricane. Expect to see production and refining come back, and with that, supply will come back. So yes, it will back off a bit, but the trend is still up, and demand is still strong, and the recovery continues. So I think oil still returns back to the mid-70s certainly I think by the end of the year, for sure. U.S. futures are up again this morning. The Dow up 72 points, the S&P up 8, the Nasdaq up 34, the Russell up 6. Expect the usual window dressing for the end of the month. While we'll get some eco data today, none of it is going to be a directional driver at all. And tomorrow's ADP report is what investors are going to be waiting for. And then Friday's NFP report will be the next big data and drama point. News this morning that South Korea is the first country to impose curbs on both Google and Apple's billing policies. This is known as the Telecommunications Business Act. These policies require developers to pay Google and Apple a 30% commission on every transaction. This bill is going to stop the App Store operators from forcing developers to be pinned up against the wall. So as the news hits the tape, both stocks are quoted down just a tiny bit. It's not really new news, right? We knew it was happening, but let's just see how many other countries now join in this fight, because that's going to dictate kind of what happens next. And Robinhood, coming under pressure after SEC Chair Gary Gensler considers the elimination of payment for order flow, which I say is about time. They should absolutely eliminate it. But that's also going to affect not just Robinhood, it's going to affect all the other platforms that sell their order flow. Schwab, TD, Betterment, all of them sell your order flow. So any one of them that sells your order flow to the wholesalers are going to be affected by this. So watch for the weakness in the sector today and in the days ahead as this unfolds. And in another disturbing story, Congresswoman Ocasio-Cortez and the rest of the squad are urging Biden to reimagine the Fed and the role that it plays in the U.S. and global economy. I mean, you can't make this up. She thinks it's time for Jay Powell to go, as if she's even remotely qualified to opine on this. And I can't wait to see how this unfolds, who they want to put in their place. But she wants the Fed to be more concerned about climate change and social injustice. Now that's brilliant. And this is the same person that told us that the unemployment rate is so low because people are working 2 jobs. Not a clue does she have. When is the Democratic leadership going to just wake up to this and say, listen, ladies, stop, slow down. Don't talk so much. European markets are mixed. News out of China is suggesting that the factory activity in August is showing some slowness, causing some concern and caution across the region. China's PMI coming in at 50.1. Remember, 50 is the neutral line. Below 50 is contraction. Above 50 is expansion. So they're saying it's weakening, but that's if you believe anything that China has to say, which I don't. I take everything with a grain of salt, and I just poo-poo it. At 6 a.m., European markets are all off between 0.2% and 0.3%. Nothing big. Gold is holding the line at 1817 and is struggling to break out. If we see weakness in stocks in the days ahead, then you can expect to see gold rally more towards $1,900 an ounce. Bitcoin and Ethereum are trading right where they've been trading, 47,300 and 3,300. There's no big change either way. The S&P ended the day at 45.28, making another new high. Another new high. What's that, 53, 54 this year? I don't even know. We remain in the 44.10, 46.10 trading channel. So anything within that channel is considered normal trading. So we're well within that channel. So there's nothing to, either way, there's nothing really to worry about. And remember, you can always text the word invest to 21,000 on your cell phone. You'll get my digital business card downloaded directly into your contacts. Got all my information on my email, my phone number, all that stuff. Feel free to reach out. Send me an email, send me a text. I'm always happy to engage, happy to talk about markets, planning, thoughts, concerns, ideas, whatever you got. You know, you can follow me on Twitter. At Kenny Polcari is my Twitter handle, and on Instagram, which is at KennyP1961. And you know, if you're watching this, you can also find me on my YouTube channel, which is Kenny Polcari Media. Okay, so what are we talking about for dinner tonight? This is a really great dish. I'll give you a little bit of history so that you also kind of understand where it's from and why it is what it is. But it's a fettuccine with leeks and peas in a light cream sauce, right? It's from the Piemonte region of Italy. Now, Piemonte is one of the 20 regions of Italy. It's located in the northwestern part of the top of the boot. It borders France and Switzerland to the north, and Liguria, Lombardy, and Emilia-Romagna to the south and the east. It's surrounded by the Alps. Its capital is Torino, which was the site of the Winter Olympics in 2006. The name Piemonte comes from the Latin word pendamontium, I believe that's how you say it, meaning at the foot of the mountain. Much of the food from this region has both French and Swiss influence, and as such, it uses a lot of butter and cream. The dish is easy to make and one that you will enjoy. It's good all year round, so you will enjoy this with a crisp, white, chilled wine. You know what I like? I don't need to tell you. Pinot Grigio, Santa Margherita. Anyway, for this you need the fettuccine pasta. You need 6 leeks, garlic clove, a big white onion, light cream, frozen petite peas, fresh grated Parmigiana cheese, and some salt and pepper. Bring a pot of salted water to a boil, put it on the back burner so it's ready when you need it. Now, using the bottom part of the leek up to where it turns dark green, cut the stalk at that point. Trim the bottom, so trim the little root off the bottom, and then slice the stalk in half lengthwise. And now slice lengthwise into thin slices so that you have all these thin slices of leek. Don't cut them circular, cut them long. Now slice and peel your onion, do the same thing, right? Chop it up, dice it. Now in a big saute pan, you want to melt a half a stick of butter, a splash of olive oil, saute the garlic clove in there that you've crushed, add the onion and the leeks. Saute slowly on medium so that the leeks and the onion brown and they don't burn. After about 10 minutes, you're going to add in the frozen peas, saute for another 10 or 15 minutes, season it with salt and pepper, put the cover on it, stir it every 3 or 4 minutes. When that's done and the peas are cooked, you're going to add the light cream. You're going to put it on simmer, just add the light cream. In the meantime, add the pasta to the pot, bring it to a boil. Cook it for 8 to 10 minutes. You know how to test it. Take 1 ladle of the pasta water, add it to the onions and leek mixture. Strain the pasta, always reserving a mug full of the pasta water. Hold that on the side. Take the pasta, put it right in the pan with the leeks and the onions and the cream. Mix it. Now the pasta's going to suck it up because that's what it does. So take the pasta water that you reserved in the mug, just slowly add it back. Don't even necessarily have to have the whole thing, but you want enough that you keep it moist, right? You want to now toss in a handful of two of fresh grated Parmigiana cheese. Toss it so it's mixed well, it's still warm. Serve it immediately, nice and warm bowls. And you know what always goes good with this? Toasted garlic bread. Especially if it's pane di casa, like real Italian garlic bread, real Italian bread, and you make garlic bread out of it. Just put it under the toaster, put it under the broiler with the garlic and the butter. Oh my God, with this dish, it's really great. And then enjoy that with the glass of white wine. In any event, the day is about to get started. The day is young, the sun is out. Take good care, and I'll see you tomorrow, and enjoy the pasta.